Hi everyone, welcome back to my channel. My name is Aseem Singhal. I'm a full-time trader, and today I am going to tell you a swing trading strategy. Swing trading means that we are going to take a trade and hold it for some days, maybe few days or at least few hours. This is a positional system, and in this I am going to use the golden crossover. That means 50 and 200 moving average along with an indicator called VUMANCHU. I will show you what this indicator is and how it works. But as usual, before we go forward, make sure that you smash that like button and subscribe to my channel so that you keep getting such videos. So let's go ahead and I'll tell you all the rules of this pattern. So let me now talk about the VUMANCHU indicator and about the strategy. In this, I use two things. I use the VUMANCHU indicator, which will give us the perfect entry. And I am using the 50 and 200 day moving average, which we already know. It basically tells us to whether the market is in an uptrend or a downtrend. And I will be trading this on an hourly time frame, and this is a swing trading. That means I can hold the trade for a few days or a couple of hours, right? So this is how you can add the indicators. You can go to either Unfluke or you can go to TradingView and you can add VUMANCHU swing free. That's the name of the indicator. And for the 50 and 200, you can either use the SMA or the EMA. So obviously we know about the golden crossover. What does a golden crossover mean? That when the 50 moving average crosses the 200 moving average, so basically when the 50 moving average becomes above 200 moving average, that is the time we will only be buying. So this is a bullish direction, and this is called the golden crossover as well. And whenever this happens, we will be only looking for buying entries. Similarly, when we have the death cross, that means when the 50 moving average crosses the 200 moving average and goes below, something like this, then this is a selling setup and we will only be looking for selling trades. But we will not be trading just based on the moving averages, because as you would know, the 50 and 200 moving average does not work so well anymore. And for that reason, we are adding the VUMANCHU indicator. So this is how the VUMANCHU indicator looks like. Once you add it, you will get these selling and buying levels. So what we have to figure out is, let's say in this example, the moving average, the 50 moving average is above the 200 moving average. That means I'm only looking for a buying entry. But when do I take the entry? We will not take entry on any buying signal. We will take an entry only if when I get the buying signal and at the same time the candle touches the upper moving average or the lower moving average, one of them. Once that happens, only then I will take an entry. So in this case, I can buy somewhere here. That can be my entry. And once I've taken the entry, my stop loss can be the previous swing. So this can be my stop loss. And here we can go for either a 1:1 or a 1:2 trade. And you can clearly see that market kept on going up and would have given me a 1:1 or a 1:2 trade. So this is how I'm going to take an entry. The very important thing is that the candle should be touching or should be very close to one of the moving averages when I get the signal. Obviously, I will be ignoring all the selling trades, because since I am in a bullish direction, I will only be looking for a buying trade. Similarly, I am showing you the selling example here. So we can clearly see that the 50 moving average is below the 200 moving average. That means I can only look for selling trades now. But which is the correct time to take the entry? You can see here. At this point of time, the candle is extremely close to the moving average. So I can take an entry here. This can be my selling entry with this as the stop loss, the previous swing as the stop loss. And you can clearly see that the market kept on going down and we could have got a very good trade. Again, I'm showing you on an hourly time frame, since this is a swing trading strategy. I also want to show you a trade which I would have skipped. If you see here, I also get another sell entry. But at this point of time, the moving average is very far. So this is a trade I would have skipped. Even though this gave me a profit, I would have skipped this trade because the candle is very far from the moving average. So let's go ahead and check some bullish and bearish examples. I'm first showing you a bullish example on United Breweries on an hourly time frame. We can see that the 50 moving average is above the 200 moving average. So we are only looking for buying signals. And when do we take an entry? Here. As you can see here, it's a buying entry and the candle was clearly touching the 50 moving average. So I could have taken an entry somewhere here at the closing price. This can be my stop loss, and I easily got a 1:3 risk to reward. That means if I would have risked about 40 points, I would have gained around 120 points. It's a very good trade, right? It's a very good trade. Let's see some more examples. This is another example I'm showing you on Tata Steel, again on an hourly time frame. You can see that the 50 moving average is above the 200 moving average. So this is a valid bullish setup. Again, I'm looking for a buying entry, but at the same time, I'm looking that it should be touching my moving average, which it is. So I can go for a buying trade somewhere here with this as the stop loss. And again, market kept on going up. This could have been a massive trade. But even if we exited 1:3, that's a great profit here. Let's probably take one more buying example before I show you some selling examples also. So I'm showing you Delta Corp on an hourly time frame. Again, the moving average is above the 200 moving average. So I'm only looking for buying trade. I will not be interested in any selling entries. This is a candle. If you see this green candle, it touches the moving average. So I've got the valid entry here with previous swing as the stop loss. And we can again see that the market kept on going up. It would have given us at least a 1:2 or a 1:3 profit. Generally, what I would do is I would keep my target at least 1:2. And if I can see some momentum, something like this, then I can even increase it to 1:3. So we have seen a few examples of buying. Let's see some examples of selling now. I'm showing you Jubilant FoodWorks on an hourly time frame. If you see here, the 50 moving average is below the 200 moving average. So this is a sell setup. Now, when do we take an entry? If you see the first selling here, we can see that the candle has touched the moving average. So I will sell here. This is my first entry. This is the selling entry with this as the stop loss. And you can see that the market kept on falling down. So we could have taken a good profit. We would obviously avoid the buying trade. Now, if you can see also that there is another selling happening, but this candle is not, okay, this is close enough. I would say this is close enough, but this would have been the perfect entry for me. This is an entry which I might skip also. Even though this also gave me a profit, I might skip because it was a little further away from the moving average. Let's probably take one more example before we see some live examples on Nifty and Bank Nifty as well. And this time you can clearly see a very perfect example. You can see that the 50 moving average is below the 200 moving average. So my first condition is satisfied. I'm looking for a sell trade only. And at this time when selling came in VUMANCHU, the candle is actually touching the 50 moving average. So it's a valid entry for me. I will take entry here. I will sell it with this previous swing as a stop loss. And you can see clearly that the market kept on falling. It could have easily been a 1:4 trade as well. So this is how I would generally trade VUMANCHU along with 50 and 200 moving average. Let's take some examples on Nifty and Bank Nifty now. So let's see some examples on Nifty first. Let me first show you the settings. I have added the VUMANCHU. So how do I do that? All you have to do is click on VUMANCHU. And this is the one, VUMANCHU swing free. This works really well. And then I've added the 50 and the 200 moving average. And as we know, since 50 is below 200, we are only looking for sell entries. And this is the first entry that we are getting in Nifty, because clearly when I got the sell entry, it's touching the moving average. So I can sell here. So this can be my selling price with this as the stop loss. And you can clearly see that the market fell down. And we would have made our 1:2 risk to reward. I would be skipping this trade. Even though this is a sell trade, I will be skipping this trade because it's not close to the moving average. And as you can see, it's good that we skipped it because the market reversed and it would have hit my stop loss. Again, you can see that I'm getting another trade here. This is another sell entry because again, it's touching the moving average. And at the same time, moving average is below the 200 moving average. So I will again go for the selling entry here with this as the stop loss. And again, you can see that I'm getting at least 1:2 risk to reward. And that is how I will be making profits in these trades. Similarly, let's see if I get a buying entry. So for the buying entry, I need the moving average crossover to be above. So I can see that the moving average crossover is above now. So, and it's very close. maybe in next 1 or 2 hours, if I get a buying entry here and it touches this moving average, then I will be able to go for a buying trade also. So these were the examples on Nifty. Let's do on Bank Nifty also. I've already added all the indicators, and I can clearly see another selling example here. It's touching the lower moving average. The lower moving average, the 50 moving average is low below the 200 moving average. So we are only looking for a selling trade. So I will take a selling entry here. I will put this as my stop loss. So if you can see, this is a stop loss of about 500 points maybe. So you can probably do it with option buying, and you can see that you get great profits. Please note that since it's a swing trading strategy, the stop loss might be a little big. But for that, if you're afraid of doing that, you can do option buying also. So in this case, we could have gone for put buying. We could have probably bought a put of almost 300 rupees, and this profit was gained only in about 2 or 3 days, and would have given us handsome profits. Again, we'll have to ignore this trade, because at this time the moving average is still below. So you might feel that we are ignoring a lot of trades, but that is because the trades that we are taking is highly accurate trades, and chances of them being in profit is very high. So I hope you like the strategy. We saw how the combination of 50-200 moving average to get the direction, and then the perfect entry using the VUMANCHU gives us highly accurate trades with a risk to reward of at least 1:1 or a 1:2. We can trade it on stocks as well on futures and on index as well. Do check it out and let me know your views on the comment section. I'll see you in the next video. Thank you.